Welcome to the Business Finance Bulletin, episode 205. Welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, rise in UK insolvencies to be second largest globally, funds allocated for growing small businesses, and the importance of credit checking your customers. If you've been catching the business news over the last couple of weeks, no doubt you will have heard about some high-profile business failures, such as Toys R Us and Maplin's going into administration. Also, there have been announcements from some high-profile high street restaurants and retailers which have announced that they have plans to close a number of their high street stores. Overall, it's looking very challenging when it comes to running a business on the high street. Well, this trend, unfortunately, started to come out from a report issued by Euler Hermes. Euler Hermes are a credit insurance provider for businesses, and as part of their annual Global Insolvencies Index, they estimate that in 2018 the UK will see the second largest growth in insolvencies, and that's just behind China, where they estimate that there will be a jump of 10% in corporate insolvencies in China. Here in the UK, bankruptcies and insolvencies are estimated to be up 8% in 2018. So obviously that's all doom and gloom. Also, this is on the back of the latest figures from the Bank of England. Every month the Bank of England announces how much UK banks are currently lending to UK small businesses. Now, as at the end of January 2018, the figures show that there's been a net shrinkage of £700 million in the total amount of money outstanding to small businesses. Now, that's a big fall. In fact, it's the largest fall since December 2014. Over 12 months, from January 2017 to January 2018, there has been a 0% growth in the amount of money currently outstanding to small businesses via lending by banks. A 0% growth. So that just shows perhaps banks are pulling back a bit, but also, as I've highlighted in previous bulletins, there may also be a bit of a lack of appetite from businesses, some very concerned about borrowing money. So against all of this, what can you do? Well, obviously it's a case of really being on top of your numbers, watching out for the red flags, taking action, which includes, where appropriate, getting the right advice. In the first segment of this week's bulletin, I've mentioned that bank lending over the last 12 months has remained static where money lent to small businesses is concerned. Now, in previous bulletins, I have mentioned that there are some lenders out there who are still proactively supporting small businesses, and pots of money are being allocated both on a national and regional level. Well, another announcement has come out from one particular alternative lender, Iwoca. They're a short-term lender, and they've announced that they are putting aside £100 million to be lent by 2020 to businesses specifically situated in the north of England. Iwoca have looked at some latest figures from UK Finance and have realised that businesses in the north of England have seen availability of credit shrink by about 14% over the last 3 years. That compares to a national shrinkage of about 9.5%. More particularly, they've identified that businesses in the northwest have suffered disproportionately, with a fall there of about 14% in terms of money lent. So Iwoca say putting this £100 million fund together. So if you're a business based in the north, then hopefully you will be able to benefit from this. If you want to know more, just go along to the Iwoca website, which is iwoca.co.uk. Now, at the same time, Metro Bank has also announced a pot of money that is allocated for growing small businesses. This is the second year that they've announced a specific pot for small businesses, and they've announced that they're putting aside £1 billion to lend to small businesses in the UK. So there, if you want to know more about what Metro Bank can do for you, just go along to their website, which is metrobankonline.co.uk. In previous bulletins, I've mentioned the importance of credit checking your customers when you are giving them credit. You mustn't forget that if a customer comes to you and asks for, say, a £10,000 credit line from you with terms of, say, repayment within 30 days, you must remember that essentially you are lending them money. You have become a bank. In order to make sure that you are safeguarding your money, it's really important to credit check that customer. In other words, Are they good for the money? Are they going to potentially leave you high and dry? Well, I was speaking to a business this week who did the right thing about credit checking a particular customer. However, what they forgot to do was to regularly check. And in fact, they missed a notice that the credit insurance limit had been pulled against this company, which was a major red flag that all was not well. Regretfully, whilst the business were told, somebody within the business didn't tell the people who make the decisions about giving credit lines out. As a result, limits were still given to this customer and, yep, they lost 25 grand. The business went down and left the business with an unpaid debt totaling 25 grand. So whilst they had credit checked the company, they hadn't kept up to date and listening out for alerts. So 2 messages there. Number 1, do credit check your customers. You can use the likes of Experian, Equifax, Dun & Bradstreet, Credit Safe. All of these will give you an indication as to how financially strong, or perhaps how not financially strong they are, and also will give you regular alerts for when things change. Please act like a bank. Make sure your money is safe before you give credit limits. Well, that's it for another bulletin. As ever, I hope you enjoyed it. And if you did, please don't forget to give it a like and a share. So thanks very much. Look forward to being with you next time. In the meantime, have a great, successful and profitable week.